Good morning and happy Sunday. This is Professor Minton, and I'm a little bit behind on getting this November video posted, and I apologize for that. I should have probably done it as I went through it in the actual classes, but I didn't. I didn't. Um, so I'll do it now. And I just want to point out a couple of things. This is at the end of November. Excuse me, at the end of October. And so you see all of the entries ending in October the 30th, which would be correct. And so let me just very quickly come over to reports and let me show you what the profit and loss will look like for the month of October. And so let's come down to the 31st. And you really don't have to change this because there weren't any entries to income or expense prior to October the 1st. So we update the report. Now you may have 79.25, and if you do, that's fine. The difference is in one class I showed $200 as an expense, which is what it should be. It actually should be 79.25. In the other class, I showed it as a asset. And the reason that it's different is because there's $200 worth of business cards that we bought. And since they're business cards, they're a one-off. In other words, you can't use them for anything else. You wouldn't be able to return them, and therefore should be automatically an expense in opposition to an asset. So that makes a little bit of a difference, but I'm adjusting on the fly for that. If you have 79.25, fine. If you got 81.25, that's fine as well. I just happened to bring up the one that's 81.25. If you chose to get it back on stream, um, just do it in October. Don't do it, and don't worry about the fact that you've already uploaded 81.25. But if you wanted to do it in October, it would be a very simple fix, and I'll show you how that gets done. I'm going to come back over to transactions. I'm going to go to more and create an additional journal transaction and come up here for the date. I'm going to put October the 31st in there for the date. And then I would actually, it's easier. Let me back up. I'm not going to do that. Well, I'll go ahead and do it this way since I've already got it up. Um, so what you would probably do in ordinary circumstances is just find that entry and reverse the entry, or in other words, put it in as an expense and then credit the asset. But we can do it this way just as easily. So I'm going to reverse, or I'm going to correct an entry. Might be better terminology here. And so I'm going to come up here and I'm going to put in an expense, which is in this case office supplies expense, if you can find it. Office supplies expense, and that was for 200. And then the credit would be to office supplies, the asset. Well, not quite. Supplies, the asset, 200. And when you make that entry in October, what you're going to end up with then is, if I look now back over to reports and do the profit and loss again, and every time you do this, you have to, because they don't know which date you're going to be looking at, go to October the 31st, update the report, and now you see it's 79.25. And the assets would be correct on the balance sheet as well. That asset for $200 would be um, eliminated. But we have a lot more office supplies, so it would just go down by 200. Okay, so that takes care of all of the old business, and let's get now to the transactions for the month of November. So we're going to start off, and you need two files up if you're going to follow me. And really, since I'm doing all of the transactions, all you have to do is just follow along with the transactions. But if you were going to do them from scratch, you would have to, like you're going to be doing in December, you would start with these two files. The first one is Exhibit 1, of course, and the Second one is Exhibit 2. So I'll bring it up as well because I'm going to have it as I work through these entries. And I'll be working with this amortization schedule over here. And so what we're looking for now, we're in November. So I want to be sure that I get all of the November stuff. I'm going to come over here and just kind of highlight it. I might highlight it in a little lighter color so I can see it easier. No, that didn't work, did it? Let's see. Let's do it gray. Okay, I think that's highlighted it enough. And so I've got all of the November stuff highlighted, and I'll have to come over maybe here and see if I got everything, but that looks about right. That way I won't get into October or December when I try to do my interest expense and so forth. All right, so let's go back over to Wave. Excuse me, let's go back over to this one. And we have to do the transactions for November. And the first one is sold $2,000 in print advertising to Jones Building Supply. Jones paid $1,000 in cash and put the balance on account. This again is not unusual. And the way that it might come up, frankly, is um, Jones is being required to pay something up front because it's part of that as a one-off. Okay, I mean, in other words, if I have to send some stuff into a printer or something like that, then that printer is going to charge me right away. And so maybe we require Jones to pay $1,000 cash and then put the balance on the account. So let's go back over to Wave and More and add a journal transaction. Now, this is happening on the 3rd of November, so we're going to have to put it in as November the 3rd. Remember how important those dates are, because if you don't put the dates in correctly, then when you try to do your income statement, it won't work right. So you have to make sure you put those dates in correctly. All right, so the description is sold print ads. And you're going to have 3 lines here. You're going to have two debits and 1 credit. And so when I come down here under uncategorized expense, I'm going to just drop that down and I'm looking for cash, cash on hand. And by the way, somebody had asked me about, they said the balance in cash at the end of October was over by about 35,000. Well, that's what it is. We started out with 36,000 and we still have about 35,000 in cash. I don't know what the exact number is, but it's close to that. Now what we're getting is we're getting $1,000 from Jones on the sale of $2,000. Now, cash on hand is a debit because cash is an asset. It goes up on the left-hand side. Debit means left, so that's why we're doing that. On the other side, we have Jones. I can find him here. Jones Building Supply, and that's an asset too because it's under the assets and it's accounts receivable. So it really should probably say accounts receivable, Jones Building Supplies. And I'm sorry if that was confusing for you. And it's also 1,000. Then we have to add a line. So I've got cash on hand, the accounts receivable, to reflect the fact that they paid me 1,000 and they still owe 1,000. Now here, what we're looking for is the income stream itself. Income goes up on the right and down on the left. So in this case, we're looking for print advertising revenue under the income side and 2,000. Remember, we always have to have equality between debits and credits, even though we might have 2 asset debits or 2 debits and something else and 1 credit, or we could have 1 debit and 35 credits. It doesn't really matter as long as at the end of the day, these 2 numbers work out, okay, and they leave a difference of 0. Okay, we finished with that one, so we're going to come down here and save that entry. And there it is, sold print ads, $2,000. Notice that if you come up and you're looking over here and you're looking for an error, if you see something here that's not check marked, if you leave it as uncategorized expense or uncategorized income, it leaves this grayed out area. So you have to edit that one and fix that problem. And if I look down through here, you'll notice that every single one of my entries has does not have, I should say, a shaded check mark. They're all done. So that means that we have at least equality among debits and credits, and we don't have anything that at this point is and uncategorized. Okay, let me pop back over here. Paid Weatherly office supplies, 700 for office supplies, and that's going to be a debit to the asset supplies. The reason being is that we could always take those back. There's no indication that they were done for someone specifically. In other words, it's like paper and toner and all that sort of thing. I get back to the office, find I don't need it. Well, all I have to do is take it back. So that's what makes it an asset. So let me come up here and add another journal transaction. This was also on the 3rd of November. Again, an important thing here to make sure that because it'll default to today's date, whatever date you do it at, it'll default to that date. And we need to make sure that it's in November, otherwise your November statement won't be right. Okay, so the description is simply bought office supplies. And let me go back over and check to make certain, but when I look at this, it says paid. That means that it doesn't impact Weatherly Office Supply at all as a vendor. We're paying them in cash, so there's no accounts payable that's coming up. All right, so looking for supplies under the assets. And if you had office supplies, same thing. 700. And how do we pay for things? Well, the way we always do, we pay in cash. And there's your cash on hand for 700. Now, notice the cash is going down, so it's being impacted on the right-hand side. This asset here is going up, so it's being impacted on the left. Assets are normal left-hand side balances. So when I put a credit to cash, it's going down. Notice that I have no difference here, and that's important because if I have a difference or if I have something here sitting that says uncategorized anything, it's not going to work out for you. Okay, next one. And you always want to check, make sure you still got it, make sure it went through. Paid master print, 225 for brochures for a client. And on this one, and it could have been done in different ways for different classes, but because you're kind of with accounting, you can do things one way, and they're not always consistent the way you do it. Now, when I look at this current entry, what I want to do with this, put it into cost of sales. And if I didn't do that for anyone, then well, don't worry about it because I've given you the right answer, and it's 271.08 for your net income for the month of November. So, and I think that all of them came out to that. And I don't even know why I said this because I don't think that it really applies in this case. So I'm going to add a journal entry and change my date to the 5th. What can I say? It's Sunday morning. And this is bought brochures. And down here, what I'm going to have is under this first left-hand side, I'm looking for the expense called cost of goods sold. And I think it's here. Let me type in here cost. Now there it is. I just didn't see it apparently. So the cost of goods sold in this case is 225. I think that was what the entry was for. And since it said we bought them, and it doesn't say that we bought them on time or anything like that, it must be cash. So cash is again going down by that $225. And now you're going to click the save button. So you have cost of sales debit. That's an expense, by the way, cost of sales. And cash on hand, of course, is an asset going down. That's how you got to the expense. I always say that the real purpose of assets is to convert them eventually to expenses to support future revenues. And that's exactly what happens here. I bought these brochures. I took some cash and I converted it to an expense, cost of goods sold. That cost of goods sold, when I bought those brochures, I'm going to turn around and I'm going to bill somebody for my services. In other words, those brochures, I probably put in a lot of time to create them. The cost of the brochures was the printing cost that somebody did for me, most likely. And so that's what that 225 represents. But what it doesn't have in it is my time. Now, if I had wages or something like that that I was working with here, then it could be embedded in those wages someplace. But it's not showing up here as a standalone. So um, it's strictly going to the cost of goods sold. And you'll see the other side of this entry here very shortly. Levinson Equipment paid the balance on their account. Now, Levinson Equipment, and I noticed that somebody didn't have Levinson in there. I think it was $5,000 that they had on their account. But how would we know? Well, we're going to go back up here to October and find Levinson. And let's see where Levinson at here. I'm pretty sure I know what the entry is, but now let me see if I can find it. Jones, Weatherly, Master, Tifton, Levinson. Okay. And what Levinson did is the same thing that Jones just did. They paid half on their bill and the rest was charged to their account. So at this point, Levinson has $2,500 that they still owe us. Okay. So I'm going to come down here and I'm going to add a journal entry. And again, just bear in mind that if I go too fast for you too quickly, just stop the video. I'm trying to keep, listen, when I go fast, the reason I go fast is because these videos are very heavy in overhead. In other words, they require lots of time and lots of megabytes and maybe even gigabytes to produce. So the shorter the video, the faster it can render. And so I'm always trying to get the video down to a smaller size and get it to render more quickly. And I have to go back over now because I ran my mouth and see when the date was. That was on the 12th. So November 12th, and Levinson paid account. And so if they paid us something, that means that cash had to be going up. And so there's your cash. And how much did they pay? Well, they paid $2,500 up front on a $5,000 sale. And so you had, in that situation, you had a debit to cash for 2,500. You had a debit to accounts receivable Levinson for 2,500, and you had print supplies credit for 5,000. Now, in this situation, what you're getting is the other 2,500 that they owe you. Now, it doesn't impact revenue. You got to make sure you don't put that back in revenue. You've already recognized the revenue. All you're looking for now is to relieve Levinson. So Levinson equipment, this is an accounts receivable. It's a normal debit. They're paying it off, so we have to credit it. Remember, you add likes, subtract unlikes. And this takes care of Levinson because now they have paid by issuing us a check for 2,500. They have paid off their account, and so I can save it. Back over to the Exhibit 1. Bought $50 in office supplies from Weatherly Office Supplies and um, paid cash. And I say charge, they should say charge, not change, but charge the office supplies expense. And again, this is probably some kind of a one-off. Maybe we bought one of those little placards that you put in front of on your desk to tell who you are, or maybe we bought some more office supplies. But as soon as you put somebody's name on something, that means it's not going to be a office supply asset. It's going to be an expense. And that's the whole purpose behind it. And I should have probably been a little bit clearer on this as to why. And as I go through and do iterations of this, I'll look at each one and remember, hopefully, what problems we had the last time and for what reason. And then I'll fix all this stuff. But for right now, since I'm walking you through the entries, it should be okay anyway. So back, going to do more and add a journal transaction. Every single one of these is done the same way. And still on the 12th. So you're going to come over and change your date. Bought office supplies. And I'm going to put on here one off just so that you understand what the difference is. And so now I'm looking for the expense. And sometimes I think it's easier just to type it in, but anyway, either way. And now over here, what did I pay for it with? Well, cash. So my cash is falling by $50. And save it. All right. That takes care of that one. Let's go back over here and see what's next. We purchased $1,200 of billboard supplies. Oops. Okay, let me plug that in. All right. Okay. $1,200 for billboard supplies. We have a billboard supplies account under assets. If you do not have a billboard supply account under assets, just simply put it under the current assets. Let's go back over here to this and look at the chart of accounts. And see, I don't think I put that in initially. So you just find a home for it. Call it 131 billboard supplies. As a matter of fact, heck, I'll just do that. Just going to highlight this. I'm going to right click and then insert 131 billboard supplies. And I'm going to be consistent here. Whoops, without the K, we didn't actually have any Ks in supplies. Okay, so that's the way that you would take care of that over here on your trial balance. If you don't have it in Wave, and let's just check and see if we've got it. We'll look in the chart of accounts here, and we need down here at the bottom other short-term assets. There's billboard supplies at 131. If you don't have it, start now. Stop the video. Enter a chart of accounts for another short-term asset, 131 billboard supplies. Okay, if you have it, we can go on to transactions. Okay, so drop it down. Add a journal transaction. I believe this is still on the 12th. As long as we're still in November, we're fine. Okay, it's better if you have the dates right, because if you went to look something up and you said, well, that happened on the 12th, and you put it in as the 15th, well, it could be an issue. Well, billboard supplies. And again, why is this an asset? Well, billboard supplies are things like glue and paper and whatever else goes into the creation of a billboard before you've actually put anything on the billboard, right? Could be brushes, to put the glue on with and all that sort of thing. I think more and more you're going to see digital billboards, but for right now, we still have regular billboards out there, quite a few of them actually. And that's what those billboard supplies represent. You can always take them back to the billboard supplier, send them back to Mike's, and get your money back or get a credit. In this case, I believe we bought them on account. Now, what this is an accounts payable. Okay, so come down here, drop down billboard supplies, and it was for what, 1,200. And down here, what we're looking for is under the liabilities now, because accounts payable is a liability. And you say, well, why do I have Mike's down here, um, and instead of just accounts payable? Well, I have to know who I owe the $1,200 to. If I'm having this, in this case of this particular video, 21 entries, that's different than if I have 300 entries, right? So put your 1,200 here on the credit side. Remember, you always have to have this equality, always, after every single entry that you make, and hit the save button. And there it is, okay? Now, if you discovered, well, that was 1,250, all you got to do is go here and edit it and change it. Paid Mike's billboard supplies for the October 12th purchase of billboard supplies. Okay, so we got to come up here to the 12th of October and see what we charged to with Mike, and it was $500. Okay. Now this is just the opposite of this one. Come down here, add a journal transaction. Find the 12th. Paid Mike's. And you can be as detailed as you want, but I'm just going to say paid Mike's for October. And then abbreviate even that. So here, what's going to happen is we're going to debit Mike's. Now the reason that we debit Mike's is because this Mike's in this case is a vendor. He's a vendor. He's an accounts payable. And I'm going to get rid of the accounts payable. Accounts payable is on the right-hand side of the equal sign. Assets equal liabilities plus equity. So it goes up on the right and it goes down on the left. So if I debit Mike's, that liability is coming down. And the way that I make the liability come down, the same way I make virtually all liabilities come down, is to pay cash. Now, there are some exceptions, so don't get too excited. There's some exceptions to that, and I could make a liability come down by returning something to the company. So, but for the most part, we have to pay it. Okay, that's the way we make them come down. And again, that's the entry. So when you put it in, just make sure that you have debits and credits that are equal, et cetera, et cetera, et cetera. Okay, what's next? And by the way, I'm going to come down through here and do what I've done here the last several times. I'm going to highlight these so that I indicate that I've done them. Hopefully I didn't miss anything along the way. Pay the office telephone bill to AT&T, which we said was the landline, for $295. Come back over to more and wave. And you always have to be in that particular side of transactions. Pay telephone bill, pay landline, telephone. You don't have to be this. I mean, these descriptions are really not all that terribly important unless you just don't put anything down there. But anything that kind of jogs your memory as to what you actually did. All right, so now we're looking for the expense, telephone, and the expense would be landline telephone. So if you come down here to the bottom where we have telephone, landline. And in future iterations, I'm going to probably put in a cell phone bill. I don't even know why I didn't do it this time. $295. That's a debit because that's an expense. And what do we do with cash? Well, we use cash to pay for expenses that'll generate hopefully, future revenues for us. Save. Okay. So far, so good. Mary Contrary paid the balance due on her account less than 10% discount allowed previously. If you'll remember, what happened with Mary in October is we sold her some brochures. And when we sold them to her, we charged her $1,750. She later discovered that there was a typo in one of the brochures. And so we went to her, and the typo was kind of minor, but it's still a typo. And Mary is not happy with the typo. So Mary said, look, I'll take the brochures, but you have to give me a discount on them because they're not perfect. And now, if it's Mary's fault and Mary gave us uh, uh, bad information or bad print, and she's written something down and we made a typo because Mary did it, Mary made a mistake, then we're not going to give her that 10%. But unless Mary's a great customer, then we might, but theoretically, we wouldn't give her the discount because it's her fault. But if it's our fault, then we're happy to give her the discount to get her to keep those brochures. Otherwise, they're throwaway. Now, remember that in this case, we only have $225 um, in those brochures, other than our time. But we have, in terms of actual cash outlay, $225. So if it got too contentious, and it was her fault, we'd say, okay, we just, well, we'll make you pay for all of it. So, that's just the way sometimes business works. Anyway, November 19th, she pays the balance on her account. More, add a journal transaction. We're doing every single one of these the same way. And I did that for a reason so you could see each time what's happening with this. All right, so Mary paid, and I'm just going to put MC, MAC, MA, what was it? Mary Contrary Argument Services. There we go. Paid bill. And down here, I'm going to have some cash coming in, but it's not going to be 1,750 because I already gave her a credit for that. I want that credit for 175 or 10%. So I've got left over $1,575. That's what I'm actually collecting from her. And down here, I'm going to get rid of her accounts receivable because she's paid it in full. And if you had looked, you would have found out that the last time what we did was we debited the revenue account and credited Mary Contrary for 175. Now, typically we would have an account called returns. That's a debit balance, but in this case, because we don't have much of it, I just went ahead and charged it in that instance back to the sale itself. In other words, um, print ad revenue. And so now we're paying off the balance, or Mary's paying off the balance. And so there you go. That pays for it. And we're getting $1,575 in cash. And Mary Contrary's accounts receivable needs to go away because she doesn't owe us anything anymore. We've taken care of all of it. Okay, back over. Build Jerry's motorcycles for billboard rent. 5 billboards at $800 each. And so back over here, more, add a journal transaction. And this is on the 19th, I believe. And Bill Jerry's for billboards. And what we're going to have is an accounts receivable now from Jerry. So you find Jerry's under the assets. Accounts receivable, the asset is going up. Ooh, something's happening here. I don't know what happened. Well, we'll find out if something went awry. Let's just remember that that's something stopped and disappeared, and it could have been for a variety of different reasons. It's probably something that they're doing some maintenance up on Wave, and Didn't tell us maybe or something. I don't know. Weren't possible that I zigged when I should have zagged. Okay, come down until you find Jerry's motorcycle, and it's $4,000. 5 billboards at 800 apiece, I think is what it is. The uncategorized income here will go down to income, and it's billboard advertising revenue, 4,000. Again, we don't have any difference outstanding. And you could have this situation and still be wrong if you could turn these things around. You still have 4,000 and 4,000. So just understand that, you know, yes, it's absolutely critical that you have the same amount on both sides, but that doesn't necessarily mean that you're right. You can misclassify something. Something belonged here and you put it there like that. Hit the save button. Okay, back over. What I want to do right, well, I'll just leave it until the end. But just remember that we may have to go back and figure out where that thing went. It kind of disappeared, but I didn't save anything. So it should have just disappeared, period. On the 26th, we paid the mortgage payment and used the amortization schedule. It should say building mortgage payment. And so now what we're going to do is we're going to go to more and add a journal transaction. This will again be a more complex journal transaction because it's going to affect several things. It's on the 26th, and the description is to pay the mortgage. Down here under uncategorized expense, what we're looking for is interest expense. And sometimes, like I say, it's easier to type it in. And there's interest expense. And now we have to go to the Excel sheet and find amortization schedules. Here's your building. And this is November, so we have to make sure we pick up November. 1596.54 is the interest expense. The next one is to get rid of the current notes payable for that. That is for the month of November. So you're looking for buildings note payable current. Go back over and find that number, 696.04. Now, if you've done it right, this number right here, this 2292.58, will be equal to this number right here, the 2292.58. That's your actual payment. So add a line, cash on hand, the credit, because cash is going down, 2292.58. The difference should be zero. Come down, save the entry. And that's, by the way you're going to do every single one of these payments that you're making. It's all going to come out of the current notes payable for whatever the item is. So let's go back to the 27th now. Pay the second payment on the new maintenance truck. Use the amortization schedule created, blah, 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 blah. Okay, when I come over here, here's the new truck. There's the payment. There's the principal, the interest, and there's the principal. 709.53 will be that number. More. Add a journal transaction on the 27th. Description is paid, second payment on new truck. Okay. Now you wouldn't keep doing this because because if you did, you'd have to know how many payments you were into this thing. So after you do it one or twice, one time or twice, and the only reason I'm doing it so you can see it. Okay. Otherwise, I would just say paid 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 payment on truck or new truck. And now we have the interest expense. And again, I'm just going to look it up to make sure I get the account. I'm looking up the account, obviously. Over here on the debit side, I'm going to pop back over and see this is the new truck. Make sure you're in the right place. 70953. That's your interest expense. Now the next one we're going to do is the note payable itself. So you're looking under the liabilities, and you're going to find notes payable, vehicles current. Go back over to your amortization schedule, see how much that is. 552.64. That 1262.17 now, that needs to be the same amount that you're looking at right here, which it is. That's your payment. And that's coming out of cash, of course. And so your difference again is zero. Bring it up, hit the save button. That takes care of that one. Back over to Exhibit 1. And again, notice that I'm just as I go through, I'm making sure that I'm taking care of all of them. Well, that does at least that lets you know that you're not forgetting any entries. So if you come up and you're short or you're over, well, at least you know that you considered everything. You may have done something wrong, but at least you considered everything. So that is one less thing for you to consider. All right, receive the electric, water, and natural gas bills for the month. They are not due until December the 5th, and accordingly, they were set up as accounts payable. The amounts for each were electric bill 450, um, water bill 8825, and natural gas bill for 300. And so if I add all three of those up together, and I could do them one at a time. In other words, I could show utilities 450 and nah, I'll just do it that way because I think I've got them set up. But if you only have one utilities uh, account, just put in utilities. If you want to do them separately, that's good too. You could put in utilities 450. Entry 2, water, excuse me, utilities 8825. Entry 3, utilities 300. Back over to Wade. More. Add a journal transaction. And I forgot what date it was. It was on the 27th as well. Find the 27th. Paid utility bills. And again, in my case, I think I've got all of these set up as individual expenses. If you didn't, that's okay too. Um, let's see if I put in utilities, what I come up with. Utilities expense, electricity, natural gas, and water. So yeah, I separated each one of them. And you would in the real world too, by the way. But I don't think that I did that for you necessarily on a video. So again, I'm going to type in utilities, and now I'm looking for the water, and it was 88 and a quarter. Add a line. Again, if you just said utilities expense 450, utilities expense 88, that's fine. And the last one is utilities natural gas, and that was 300. The benefit of doing it this way is you don't have to add them up. Now you know it's 838.25. Okay, add a line. You're going to pay them in cash, so you're going to find your cash. And 838.25 to make it balance. Okay, that takes care of that entry. Now in December, we should, I hope, pay for that. I hope I did that. On November the 28th, paid the other vehicle payment. Um, and so the other vehicles are those existing vehicles, I don't think what I call those. And so we come over here and we'll find the existing vehicles. That's this one. And it's 996.43 and it's going to be 293.04. More. Back over in Wave. Add a journal transaction. October, November. I think it's 28th. Um, paid monthly payment on vehicles. And I can remember usually, but when I have too many things, go 293.04. And so what are we looking for? Interest expense. 293.04. The next one, of course, is going to be note payable current for vehicles. And that amount is 703.39. Add a line. Cash. And again, that's your payment, 996.43. And that comes right off of that amortization schedule. Nothing to it. Same thing every time. On the 29th, we pay the land payment. It's going to be the same kind of a thing. The land payment is right here, 1687.71, and here's your interest expense. In October, November 28th, I think is what it is. Paid land payment. Interest expense. It, how boring it is because it's always the same, right? The thing that's changing are the numbers. And of course, this guy right here, the note payable. So again, we have to be in the liability side. And we're looking for land note payable, non-current. Oops. Man. Well, maybe I started it out with notes. Here it is. So I started mine out with notes payable. Yours might be different. Okay. You might have started it out with land. 691.15. 1687.71. That sounds like the right number for cash. Pull down cash on hand. Over here, 1687.71, and save it. All right. Now, it was actually on the 29th. I put it in as the 28th. It's not going to affect anything in this situation. Otherwise, I'd have went back and changed it. All right. On the 30th, Jerry's motorcycle paid the October billboard rent, which was $4,000. I just remember that. But so since they're paying the rent, remember we charged them initially. Okay. More. Add a journal transaction. on the 30th. Description is Jerry's paid October billboard panel. And again, these descriptions are just to kind of jog memory so that um, so you can go back and say, oh, okay, this is what happened on this. You got cash in for 4,000. Jerry's paid it, and the accounts receivable that we had set up for Jerry until he paid it, I can get rid of because that's going to be now a credit for 4,000. So remember that assets go up on the left, they come down on the right. Jerry's asset accounts receivable comes down because he doesn't owe it anymore. Cash is what makes sure that that is a fact. That's why he doesn't owe it anymore. He paid it. And save it. And now we're going to be down to your um, depreciation entries, I believe. All right. We already calculated these one time. And we did it. If I come back over here to Wave and I go down to the October entries, if I come all the way back up to the end of October, here I have it. Depreciation on the office equipment, $200. Depreciation on office furniture, $75. Depreciation on building, $800. Depreciation on new trucks, $650. And depreciation on existing vehicles, $1,250. Okay. Now, since I'm pressed for time, I'm going to do this in one big entry. Okay. More. Add a journal transaction. It'll be on November the 30th. You can separate them, sure, if you want to separate them, that's fine. Recorded depreciation. All. All right, so depreciation expense. Now the depreciation expense is going to be the total for all of these guys. All right. So I'm going to put it, let me see if I can just find depreciation expense. Oops. Here's my depreciation expense. I don't know what it is yet. Actually, I do, but we're going to go ahead and do all the accumulated because those have to be done separately. So accumulated depreciation, vehicles. Now, this is actually for both of the vehicles. So one is $1,250, the other one is $650. So that should be $1,900. Add a line. Now, the next one is accumulated depreciation buildings, and that one is for $800. Again, if you get lost, just go back to October. It should be exactly the same thing for October. Office equipment, that one was for $200. Add a line. Office furniture, and that one was for $75. And your monthly depreciation, unless something changes, is going to be $29.75 every month, and it's going to be done. And you can do depreciation expense for each one of them. That's fine, and a lot of people would do that. I don't care how you do it, whether you do it as one entry or 1, 2, 3, 4, 4 entries. Either one is fine. Save. All right, so now let's see, because that's the last of the entries that I recall. And since I did them all, I'm just going to highlight them all. And the only ones I'm really interested in are the trial balance and the profit and loss. I'm not asking for the statement of cash flows for you to load up, just the income statement and the balance sheet. All right, so let's go down to reports. Profit and loss. Now, sometimes this thing works weird, and I don't know why, but I always sometimes have to start with the last date for it to let me work with the first date, and I don't know why that is. Really kind of crazy. By November the 1st, so it should say 2022 1101, 2022 1130. That's the beginning and ending, and update your report. And we have an error. And I see where it is. It's right here. It's income. Let me pause this video for a second until I find the error, and then I'll just report the error out to you. It's going to. Okay, well, that was easy enough. I knew that it has to be 8250 for the revenue. And what I did was remember I didn't write them off one at a time, and I missed one. And the one that I missed was Levinson's billboard, 3 billboards at 2250. All right, so I have to go back to accounting and back to transactions. And this happened, let's see, when? On the 12th. I don't know how I missed it, but I missed it. So more, add a journal transaction. And I'm going to come back over here, put it in as November the 12th. And Bill Levinson. For billboards. Accounts receivable Levinson. We find Levinson under the assets, 2250. And down here under income, billboard revenue. Billboard advertising revenue, 2250. Now I think we should be okay. Move this thing out of the way. Minimize it for a second. All right, now let's come back over here to reports. Profit and loss report. Again, by November 30, put that one in. That will let you get to November the 1st. Sometimes it won't let you, I'm telling you. Update your report. Good time of day, I'm still out. I'm still out. 980.61. It has to be 271.08. So I'm going to stop the video again and see where I made a mistake. I know now that this 8250 is okay. Let me look at the details right quick and see if that throws it out to me. This looks like a little bit of a weird number. 288,614, the interest expense. Maybe I missed something on interest expense. So let me go check that first. But what I'm going to do is I'm going to bring this back up. I'm going to pause it. Okay, well, I found it. And yeah, I was right. That's where that one didn't look quite right on the end. Some reason or another, I thought we put it in, but maybe we didn't, or maybe I didn't. It's not you, it's me. If yours didn't work out to the same one mine did, maybe you put it in and I didn't. But anyway, let's go back over here and find the new truck. And down here, let's see here. Second payment on the, I know I put that in. I thought I did. November 27th. It could be, remember when that thing kind of went out on us? It could have been that they were doing some maintenance or something like that. Paid new truck. Or maybe I didn't save it or something. I don't know. Anyway, let's go back and get it. And so we want interest expense. And go back over to your amortization schedule. And the interest expense on the new truck is $709.53. And down here we have Notes payable, current vehicles. I think it's down toward the end someplace. Current. And that one is 552.64. Add a line. And of course, cash is the difference. I'm certain I saw that at one time. 1262.17 and save. When you're doing yours, you may not come up with these errors because I mean maybe that just something glitched on that. We'll find out here in a second here. Let's go back to our profit and loss and create the 1130 profit and loss. Change that to the first. Got to be careful with this. Sometimes it doesn't do what it's supposed to do. And now update the report. 271.08 is the correct answer. 271.08 is the correct answer for the month of November. And just you want to export it, of course, come up to export the PDF. PDF's the only thing it'll accept, so it has to be a PDF. Okay. And then go back to reports, go to the balance sheet. And the balance sheet we want to make sure shows November the 30th. No, notice that there's no beginning because the balance sheet's only good for one day. So in this case, November the 30th. And so I'm showing this 26.037.18. I don't know. I mean, that. No, I don't know what's happening to this thing. We put in accumulated depreciation vehicles 1900. I know. I remember that. 11/22, 11/30. Update report. Oh, I must not have hit the update report. I was going to say, come on now. So here we have the buildings, and I remember it was 800, so it's 2 months now, so it's 1600. This one was 73,125 when we started, and we added 2 times 1900 or 3800. So that one, 200 added or per month here, so it's 400. 75 added per month. So that is where you should be now at on your balance sheet. Notice you have to add this number plus this number. What's the basic accounting entry or equation? Assets is equal to liabilities. Assets is equal to liabilities plus owner's equity and liabilities. And when you add this one and this one, that's going to get you back to 366.80, and that would be the correct amount. You're going to export that as well. I want to do one more thing just for the heck of it. I want to see what the cash flow looks like. And we're going to be looking. I want to look for the whole period here, just out of curiosity. Here's your net cash change, 35,625. And so somebody I think had shown me the number, said, well, I was over by that. No, that's your net cash change. And you're just looking at the difference between this was your beginning balance, this is your gross cash outflow, and so you wind up with a net change of, in this case, 35,625. But I'm not asking for that report. I just wanted to see it out of my own curiosity. Okay, that should take care of it. I will have to render this. It'll take a